The views expressed on this podcast are those of the participants, not of Reuters News.
As Japanese voters prepare to go to the polls on February 8th, the country is grappling with record-high bond yields and a flailing currency. But far from being a local problem, trouble for Japanese investors has a way of drifting over to the US, given the country is one of the largest creditors and Japanese residents are the largest owners of US treasuries. How this situation is likely to unfold and how the new government might tackle a potential economic crisis is the focus of this week's Viewsroom. It's Amy.
And it's Una. And this is the Viewsroom, your weekly podcast that invites you, our dear listeners, into a lively debate about the hottest issues in business, finance, and economics. Now, Amy, I think it's fair to say that Sanae Takaichi shocked even her own party by calling a snap election. I mean, she is really only a few months into the job, so that's pretty bold. And now...
So this is the Prime Minister of Japan, right? Just for our listeners who don't know much about Japan, this is the Prime Minister of Japan.
Yeah, and now, incredibly, she's called a snap election and she's poised to win a landslide victory that would turn a razor-thin coalition into a majority. Now, the problem here is that markets were already freaking out about her plans. They just don't like them. She wants to spend big and cut taxes in the $4 trillion economy. The yen, as you said, has softened 6% since October. Bond yields, as you said, are spiking. And here is the rub. These higher yields are raising fears that some $3 trillion of Japanese capital that is parked overseas will rush home and create epic problems, funding problems for the markets they leave behind in the rest of the world.
And namely the US, right? So this is one of the big problems for sort of global finance is how interlinked these two countries are,
it's
right?
not just the US, and we can get into that. But yeah, that's one of the big ones.
Well, listen, I think we have two experts with us, and Una has been obviously looking at this very closely as well as Asia editor, joining me today as co-host. Jonathan is sleeping, understandably, in New York. We have Hudson Lockett, who is our Japan expert, and we also have John Sindru, who is our global economics editor. So, John and Hudson, you are very welcome.
Good to be here.
So, John, Una touched on it there, and she's right. It's not obviously just the US that is very reliant on Japan. So could you give our listeners just maybe a bit of background as to why Japan is so important to the world economy?
Well, essentially Japan, because it's had such low interest rates and such low bond yields for such a long time, has become the funding country where, you know, all the capital goes out and chases higher yields abroad, or even like, you know, currency speculators go and borrow low to try and buy higher yielding currencies. And if we look at the former of these phenomena, all of these big institutional flows, as you were saying, Japan like owns $1.2 trillion in U.S. Treasuries. It's the biggest holder of them. If you go to the Japanese banks, they own about $500 billion in G7 bonds. The other financial institutions, so we're talking, for example, the government pension fund, they own another $1 trillion. In this government pension fund, like basically half of their allocation right now is in foreign assets. The reason is quite simple. They just weren't getting returns at home, and they just went abroad and bought all these bonds and some equities as well. If we look at the period between 2005 and 2020, roughly a year on average, Japan was buying 250 billion of foreign portfolio securities. So it's a lot of buying flows that now might reverse, right? Because the idea is as yields rise in Japan, well, what's the point of investing abroad, right? So all these flows should come back. In practice, I think it's a bit more complicated. We've seen foreigners attracted to the Japanese bond market for the first time in living memory, but it's not necessarily so straightforward that all of these institutions will pull their money back to Japan. In fact, some of them so far have done a bit of the opposite, right? Like they've kind of doubled down on these foreign returns to try and compensate for, the fact that they might, fear that they need higher returns because of the aging population. So it's
we can get a bit more into that, I think, and I would love to challenge you a bit on this sort of repatriation of capital, because I think there's a lot of like talk, and then there's the reality, and then there's the rhetoric, and there's supposed to be a big gap between what is really happening. But I mean, maybe we can just start by asking, really, Hudson, maybe you can bring you in here. Like, what is going on in Japanese politics? I mean, why are we even having a snap election now that could potentially cause all these problems? And what do we know about the potential scenarios and the outcome here? Like, is there a kind of a divergent outcome that is possible here?
Sure. I mean, so this election was called by Prime Minister Takaichi to get a popular mandate for what is essentially an agenda of debt fueled growth and tax cuts, and ideally to improve the ruling coalition's very, very slight majority in the lower house, the powerful lower house of Japan's legislature. Takaichi was sort of swept into power after sort of surging inflation delivered consecutive body blows to her party in the last two elections, the LDP, Liberal Democratic Party. And while there are opposition parties and challengers, obviously, it's also fair to say that the premier has pretty successfully made this into a one-issue election, and that issue is herself. She is really banking on what is a quite remarkable honeymoon period that has seen her approval ratings in the high 60s, 70%. They're falling, but it looks as if she's called this in time to really steal a march on the opposition. And recent polling suggests that the LDP and its allies are probably going to enjoy something of a landslide.
Okay, and if they do win a landslide, which goes back a bit to the kind of the repatriation of capital point we were discussing, what is likely to happen to the markets, given they're in a spin already?
The market reaction has gotten a little bit more intense after she vowed to suspend a consumption tax on food for 2 years, possibly longer. Sort of mostly because folks are worried that she is both expanding expenses and shrinking the tax base all at once for a country where debt is equivalent to 250% of GDP already. So the finance minister has threatened currency intervention and sort of talked up coordination with the Fed, and that has helped some to rein in yen depreciation. But the reality is that like intervention historically works best when it's not flagged in advance, and the impact from moves like that is usually pretty fleeting when the fundamentals behind market concerns aren't fully addressed.
But isn't the point here then that the outcome is likely to keep bond yields ever elevated and to make this repatriation of capital issue just more and more pertinent in our discussions about Japan going forward?
I think that's fair to say. I think that simultaneously there are some limits on the speed of repatriation and the scope, simply because the size of Japan's market is pretty small and its depth is fairly shallow when you compare it to that of US treasuries. Pulling the full amount of Japanese investment, not that this would happen automatically, but pulling that all out of those US treasuries and G7 debt and plowing it into potentially higher yielding currency risk free Japanese bonds. It's kind of like a clown car situation. Well, it's a reverse clown car situation. You can't squeeze that all into the space. It simply won't fit. And so I think that what it does is it really drives home for global issuers that they need to come to grips with a world in which Japan is not there as the creditor that it has been for essentially since the start of Abenomics.
Yeah, what I find really interesting about that is that, I think we were just discussing earlier that Takaichi is among the more fiscally responsible politicians in Japan at the moment. And so it's scary to wonder what would happen if some of the more extreme opposition parties were in charge, right?
Right. Yeah. I mean, I don't think she'd call her responsible, but you could call her, compared to some, relatively responsible.
Yeah.
And I think that even though there's not necessarily a lot of support for that agenda at home. In fact, polling suggests that people are kind of like 50-50 on whether they think it's actually even going to work. But she's done such a good job in this election of making it a referendum on her popularity that may not matter.
And John,
I mean,
what's your view on that?
To be fair, 10-year bond yields, they're 2.3%. Like the 30-year bond yield that everybody obsesses about, is it 3.6? that's kind of pretty normal. Like, people
Well, it's
were
kind of
talking
low,
about,
right?
oh,
Compare that to the UK or,
well, yeah.
you know?
Well, sure, but let's not do that, maybe. But people were talking for ages about the Japanese reflation. Well, it's here, right? This is kind of what a reflated country looks like. My feeling is there's two camps in this, and Hudson might correct me if I'm simplifying it, but there's the camp of this is a disaster because, again, Japanese debt above 200% of GDP, all this kind of stuff. And then the camp that says, well, actually, Japan has this massive stash of foreign assets, right? Like a net international investment position of about 90% of GDP. And then if you take into account that the Bank of Japan owns more than 100% of GDP in this debt market, so the argument is it's not a problem, right? Because Japan can always repatriate this capital and kind of fix all this stuff. And I think I'm in a weird third camp where I think actually none of this matters very much. And ultimately, if you keep pushing on demand, right, and if you keep pushing on this fiscal lever, you might go too far, and you might go past the point where people are angry about inflation, because as much as we were talking about Japan needs inflation, I really never got that point. Like, people hate inflation. Let's not have inflation. What Japan needs is growth, right? You get a little bit of this, but if the currency falls too far and inflation goes too high, people can get really mad. So I do get that point. But at the same time, the idea of like a debt crisis in Japan, I mean, why? Japan prints the yen. If it can hold on to, the depreciation, and politically it's not costly, this could carry on. I really don't see why not.
But the other thing I was sort of curious about, Hudson, and John, is you have inflation above target, right? Above the Bank of Japan's 2% target.
Only a little. Only a little.
Yeah,
2.1.
only a little, but still, right?
For a long time.
But so you have that, and now you're going to apparently launch a stimulus package.
I mean, she's essentially... Sorry.
Does that not cause a problem?
I mean, in terms of, I guess, imported inflation, I would argue potentially yes, right? So token promises of fiscal responsibility aside, it's very clear that Takaichi wants a massive Abenomics reflationary style spending splurge when inflation is above target, ideally facilitated by low rates with minimal concern for the impact on the yen's dollar exchange rate. And that's a problem because Japan imports 80% plus of its energy. So like you're going to be driving up inflation quite a bit more across the board by importing it, essentially. And she's even said that the current state of Japan's finances is one of excessive drift toward austerity, which is, I think, overstating it.
I mean,
that's totally right.
It's worth pointing out that in Japan there is this big distinction, and the BOJ makes it all the time, about good inflation and bad inflation, right? So there's the imported inflation, which is the bad inflation, and then there's a good inflation. I think that's sort of the Bank of Japan's view is that the good inflation isn't good enough.
Okay. I think that's totally right. So, but that's kind of what I was saying, right? It's if Japan can swallow this trade-off, right? Higher imported inflation, weaker yen, which is bad for consumers, and higher rates, sure. I don't believe that there is a debt crisis around the corner because, again, Japan prints its own currency. I think this can carry on. But my question, and that's where I think Hudson has to give us the answer, is can you sell this to the people? Like, can you say, oh no, my fiscal package actually lowers inflation, and then the reality kicks in, and you are, as you say, Amy, above target, and you have this imported issue. I mean, will people be happy with that?
Well, I mean, I don't think that they'll be happy, but I think she can get away with it. I think that
right
let's say she takes the opposition to the cleaners, gets a nice majority in the lower house, passes all of this, and inflation shoots through the roof. Well, she's still got 3 years or so before the requirement is 4 years between elections. Usually the lower house lasts about 3 years. She's got a good stretch where she can do whatever the hell she pleases and not actually face any consequences for it. And I would say that all of her policies do really look self-defeating when it comes to tackling the inflation that actually kicked her predecessor out of office and put her in power.
Well, let's be clear. There are some consequences. The bond market will hold her in check if nobody else.
I was going to say, I don't think anyone could just sit there as their currency is tanking and bond yields are going through the roof and be like, I'm here for another 3 years, everybody. This is all going to be fine.
The BOJ can take care of bond yields. Also, again, if there's some repatriation, that can be fixed to a certain extent. The currency, yeah, that's a good question. Like, let's say people have compared her a little bit to Liz Truss.
Yeah.
Let's say that the Bank of England would have been more helpful to Liz Truss. Let's put it this way, and just fix the gilt market issue back in the day, the pound would still have fallen probably. Could we have taken the pain? Could Liz Truss have taken the pain of that? I mean, to me, that is the question here. It's not really the bond market, it's the exchange rate.
Well, I'm just sort of curious, as then maybe just to kind of close things off. So, Hudson, what do you think happens after she gets this landslide? What do you think is the what happens next, basically, in terms of financial markets?
I mean, for now, my base case is essentially her cabinet already approved sort of a record fiscal budget for the coming fiscal year of about $800 billion. And that figure probably goes up. And then so do JGB yields, which pushes down the yen. And I think that probably brings forward rate hikes from the Bank of Japan to try and tame that inflation. And ultimately, what I think we're going to see is a sort of fiscal showdown between the prime minister and Kazuo Ueda, the central bank governor. And that is something that I think that is a contest I would expect the BOJ to win, ultimately.
And then where does that, John, leave us with global markets?
I mean, I think ultimately, yes, the buying, the flows from Japan were important, but ultimately, financial markets just reprice. I think, ultimately, bond yields are anchored to interest rates. Like, people talk a lot about, we have bond yields above 3%. Well, interest rates are above 3%. So ultimately, this buying pressure helps to a certain extent. I think we will see the term premium on the bond market be a bit higher, but I wouldn't say this is financial apocalypse. And I mean, the other issue, just to finish it off, is the yen is at its lowest real, like, as in inflation adjusted exchange rate since the 70s, like, let alone the Plaza Accord of the 80s, right? You would think maybe at some point people will buy it, or maybe at some point, the U.S. will get really mad about this. But there will be a certain concerted interest for the yen to revalue a little bit. So it's true what Hudson has said. Intervention, especially the way it's been done, doesn't usually work. But who knows? The yen might also be just so low that it can only go up.
Very good for holidays.
And let's hope she doesn't have a Liz Truss reaction to all of this. But yeah, so if you're listening to this on Thursday, the election is Sunday. That's when all of the Japanese voters will go to the polls. So we will be watching closely. Hudson, John, thank you so much. Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. We have a new email address where you can send feedback, which is breakingviews-podcasts@tr.com. And check out our views on the biggest stories in business and finance every day on breakingviews.com and on reuters.com.